Howdy, Jacob here. Today I'm going to do a one-off video, a high-level review just on numbers of Nextracker. I'm going to look at the numbers, see where it's at before doing any more research. For me, that's just how I approach stocks. I think you're wasting your time if you do research the company first and then look at the numbers. There's too many companies out there. I'd only want to look at the ones that make sense. So Nextracker is in the electrical equipment industry, over $8 billion market cap, similar enterprise value. Looks like they provide solar tracker and software solutions for utility scale and ground-mounted distributed generation solar projects. So founded in 2013, is already $8 billion. That's pretty impressive. The only thing is that's tough for me, or at least the first thing I see that's tough for me, is that there's not a lot of history here. I see that there's just 4 years of data, and I had to use, because the incomes were coming through as zero, I ended up using percentages on the earnings margin that are income from continuing operations, just because I'm not going to just say that it's zero for 2 years. I'm just going to be going off of a slightly earlier income number and then just depreciate it on the back end based on, the things that go into that, taxes and interest and stuff. And so to me, it was just interesting to see, there's definitely growth here. We see a little bit, and then 300 million growth, 400 million growth, 400 million growth. So we definitely see some growth here. They are in the solar. It looks like they do create solar panels, which has, been super hot. Whether it'll keep that hot or not, we'll see. R&D spend $34 million, interesting. Okay. And then net income negative, most recent rolling 12. But their cash flow has been more consistent outside of 2022. So we see that rolling 12 is actually $349 million, which is, maybe 20-something times that. So I feel like from a valuation standpoint, I'll probably not get to the price that makes sense at this price point, but that's not to say it's not a good company. Capital expenditures are just really low. So that's pretty great. It doesn't take a lot to maintain the business, which is awesome. And the only thing is their use of cash flow. It looks like they had a one-time dividend back here. Otherwise, this other category, and I looked at a few other websites, macro trends, some other ones that just have their cash flow, and it was interesting to see that they don't really specify where it's going. Obviously, if I were to look at their 10K, 10Q, that'd be more obvious, but again, I don't do that until the company gets to a price point that makes sense to me. So, getting ready to make some assumptions here. Being in the solar industry, I think that they do have growth ahead of them. I'll probably presume less growth than other people. After 8 years, 7 years, what do we think the growth is going to be looking like? Will they have a moat? It's just a lot of uncertainty to me. So to me, I'm going to put in a 17 P price for cash flow. No, maybe 16, because that's saying that they have a little bit more growth than the market, but has the solar market become saturated? Are they the top dog? I just don't know these things. So this would be, if you know the market, if you know this industry better, absolutely, you can make some better assumptions there. But for me, with my knowledge, just looking at the numbers, that's how I would take it. And then I'll probably do rough averages here. So free cash flow average is 8. That's not bad. Maybe I'll do 8 or 7, 8, and then share change. Again, I don't know if they'll keep it flat or not. For me, it's just not at the price point that makes sense. But I just don't understand. I really want more data here. It's so much easier to make more positive assumptions when you have a lot of data backing you up. Whereas here, you just don't have that. There's only 4 years of data, and the stock's only been around for, I think, a year. if you look at their historical data, it goes back to February 23, so just a year. So they haven't had to report because they've only been a public company this long. So it's just tough to really use everything we got when we just don't got much. We just don't have very much. So thank you, and I hope you have a great rest of your day.